Welcome back to the show. We got a special guest in the house today. Give it up for Crypto Stu from Flex Perpetuals. What is going on, my man?
Hey, how's it going, AG?
It's going good. Goldwyn,
We-
where are you at right now? You look like you're on vacation.
I am. I'm in sunny Orlando, Florida. I'm pretty close to you, actually.
Nice.
Hmm. Yeah, it looks like you're at a resort or something.
Yeah, we're at the Hilton Grand Vacations by SeaWorld.
Nice. Now that everyone knows your location, they can come stalk you.
Come visit me. I'm in room.
Gotcha. So, Stu, man, you got your project's getting ready to launch. Do we have a set date?
We don't have a set date yet, but it's getting really close now. So I had a meeting with the dev team at the beginning of this week, and we're really in the final stages. So they're currently deploying the contracts onto mainnet. So all the testnet testing is all finished. And that process of deploying all the contracts onto mainnet takes about a week.
Hmm.
So they expect to be finished with that on Monday. Then there's going to be 2 to 3 days just getting the infrastructure with the servers, etc., all working correctly. And then we just need to test everything on mainnet before full public launch, if you like.
And the mainnet is base chain.
Base chain, yeah. Yeah.
All right.
Nice.
So for transparency, we're recording this on Saturday the 4th. So when you say Monday, you mean the 6th, because we are going to put this out, I think, Tuesday the 7th.
Yeah.
So
Monday the 6th, my bad. Yeah.
yeah. So okay, cool.
So it should be, by the time this goes out, the contract should all be on mainnet, which is great.
Nice.
Okay.
Yeah.
So we're looking at probably a launch this month.
Yeah, it's going to be, we're pretty confident that it's going to be in January. And we'll be doing the FLP surge raise in the 3 days immediately prior to the platform going live.
Okay.
Yeah, that's good. I told everybody in our audience last Monday that it was going to be in January. So I think
Yeah. We were hoping for the 13th of January, but just with everyone, over Christmas time and New Year and people off, and not even just our dev team worked the whole way through, but they weren't able to get in contact with our auditors and people like that. So it just puts things back a few days.
So let's start kind of basic. Like what is a perpetual DEX?
Yeah.
So
So
let's go
well,
super basic.
Flex Perpetuals and any perpetuals exchange essentially allows traders to come on and speculate using leverage. So, you may only have a bankroll of $1,000, but with perpetuals futures exchange, you could put on a 10 times leverage trade. So your trade size will be 10 times what you actually have in your wallet, if you like. And obviously that means that you can experience much bigger gains relative, percentage wise on your capital. But it does work against you, if you get it wrong.
Yes, it does. Yes,
um,
I know that very well.
hello liquidations. Yeah.
Yes.
AG and I found out about that in the last 2 weeks. That's for sure.
Yeah, I think we've all got a few scars. There was some clear market manipulation happening during December. Just market makers hunting for liquidity. But yeah, so it's just a platform that allows you to trade with leverage. There's also opportunities there for those. If you're not a trader, you can still get involved with Flex Perpetuals by providing liquidity, and you get a share of the revenue that the platform makes. Because of every time that a trader opens or closes a trade, they pay a fee, a trading fee plus a borrowing fee when they're using leverage, and so those fees are then redistributed to the investors in various different parts of the ecosystem, so that you can earn yield on your investment inside Flex Perpetuals.
So what's some of the ways people can't? So they can provide liquidity through like Airdrome or directly on your platform. How are they going to provide liquidity?
So there's two kind of main routes for providing liquidity. You can either provide liquidity for our native token, which is called FDX, and to do that, you would you'll get the liquidity on you'll pair the liquidity on Aerodrome, and then you can either stake that on natively on Flex Perpetuals, and if you stake it on Flex Perpetuals, you'll get a share of the revenue. I think that's 30% of the protocol revenue is paid towards native stakers.
Oh, really? 30%?
Yeah, 30% of protocol revenue goes to the native token liquidity staking. So it's
Okay.
staked as FDX ETH, and you can either stake it on the platform, or in the future you're going to be able to stake that on Aerodrome as well. So you can, because we've got a big treasury of locked Aero tokens. So what we can do with that treasury is we can incentivize people to provide liquidity on Aerodrome itself. And so we can use bribes and incentives to be able to do that. So people will have the option to either stake it direct on Aerodrome or stake it on our own platform. And what that does is it means that the TVL on either of those two places is going to be smaller than it would be if we only had one place to stake that. And because the yield is coming from different places, so the yield on the platform comes from revenue, and the yield on Aerodrome comes from the incentives and the bribes. It means that there's going to be a really interesting kind of interplay between those two different places to stake, because if APRs start to drop on one of them, then we expect that liquidity will move over to the other pool, which will then bring the APRs down in that pool. So there might be quite a lot of moving around in terms of people chasing the highest yields.
Okay.
And so that's one type, and then the other type is the FLP, which is essentially the market making liquidity. This is the kind of the engine that makes the platform work. So we use an automated market making model, where people like you and I provide liquidity, and that is the liquidity that's used to essentially underwrite the leverage trading. So it's the counterparty to the leverage traders. And the FLP, you can deposit USDC, or you can deposit Coinbase wrapped Bitcoin, or you can deposit wrapped ETH. And in return, you get the FLP token. And the FLP token is like an index token. So it's made up of those three assets: USDC, Bitcoin, and Ethereum. So what you're essentially holding is like an index fund of those three assets. So during the bull market, we've just did a vote in the community,
Hmm.
where we decided to go with a slightly more bullish biased allocation. So we're going to be doing 40% USDC, 40% wrapped Bitcoin, 20% ETH, to try and take advantage of the BTC momentum.
Hmm.
But we can change that, in the future. If we start to see signs things getting a bit toppy, then we can increase the stable allocation so that it becomes less volatile. But
Well,
when you're
you got a pretty high stable allocation already, 40%.
Yeah, but it is ultimately the liquidity that backs the leverage traders. So we
Okay.
can't just throw caution to the wind and go all in. If you like, there has to be a level of stability
Sure.
there. Because what would inevitably happen is, when if the market dumps on us, then Bitcoin's going down, Ethereum's going down, and all of a sudden the amount of liquidity that we have, that is the counterparty to all those leverage traders, um, is going to fall significantly, and that's not a good thing for our traders, because we've got lots of risk management mechanisms in place, and to protect the liquidity pool. So that would just end up meaning that people are liquidated earlier, or their
Yeah,
positions are closed earlier. So
that's true.
And so,
And that pool itself, so as well as being the index token, you're getting 45% of the protocol revenue as paid in USDC.
nice.
That's awesome.
But
It's my favorite part. It's my favorite part of the protocol. I'm already in a number of these pools and different perp dexes that are out there.
so you guys are a fork of HMX, correct? On Arbitrum?
Yeah, friendly fork of HMX. So they supplied us with the base code base. So we're launching with battle tested tech in terms of the trading side of
Hmm.
things, but we've completely revamped and we feel next generation tokenomics wise that we think is going to really help Flex Perpetuals in the long run, supporting the token price, and just and sharing more of the revenue with our investors than any other perp dex out there.
Do you want to
Yeah, I
run
do like
through?
that.
Do you want to run through some of the tokenomics of your tokens?
Yeah,
What
sure.
tokens make up the Flex?
Are they on this screen?
Yeah,
Okay.
shall we share that?
Whoa, look at that background, AG. I like it.
Let me just find the right slide. So this is basically the tokens in the ecosystem. You've got FDX, which is the native token. That is going to be a governance token when you've got it staked with ETH on the platform. And then that, as I've mentioned, that benefits if you stake it natively on Flex Perpetuals, you're going to be getting 30% of the protocol revenue for staking that. Then you've got FLP, which is what we've just been talking about. That's the market making liquidity pool. And then the others, so those are the two main tokens that people are interested in. The others are complementary tokens for the ecosystem. So the ESFDX, you can't buy ESFDX. That can only be earned. And so part of our overall token supply is being allocated as ESFDX. And it's basically an escrowed version. So when you stake FDX ETH LP on the platform, or when you stake FLP, you will earn ESFDX as over and above the platform revenue. You're going to earn this native token
As a bonus.
As a bonus, yeah. So it's we call it the community incentive pool essentially,
Okay.
and what this means is so that will when you earn it and you claim it, it will automatically be staked for you. So it's increasing your earning power in these pools. So, like, let's say you start with $1, staked. Over
Hmm.
time, with the community incentives, you're going to have $1.1, $1.2. So your earning potential increases, and you can, if you choose to, you can vest that out. If you want to sell that, you can vest it out, but it's vested out linearly over 365 days. So personally for me, I just want to build my bag that I'm staking. But the option is there for those that want it. When you earn this, you can vest it and you can sell it, once it's vested out on a daily basis. The flex points, this is like another bonus. So you earn this at 100% APR when you're in this STX, the FDX LP. And what that does, again, that increases your earning potential. It grows at 100% APR, but as soon as you remove your liquidity, you lose it. It's not a token that you can buy and sell. It's like a multiplier type effect of your
Okay.
earning potential.
So it's encouraging people to stay in the pool, is what it's doing.
Yeah, absolutely. It's an incentive not to leave the pool, because the longer you stay, the more of these flex points you're going to get, and the bigger your earning potential.
Oh,
So
I like that.
we want to incentivize people to stay rather than penalizing people for leaving. So like rather than having a tax if you leave or a lockup
Mhm.
for a specific period of time, this Flex Points is designed to incentivize people to stay.
I like that. Don't
Yeah,
punish, but encourage.
Yeah. And we want to incentivize the right behaviors rather
Mhm.
than kind of trying to police against behaviors that are unfavorable to the ecosystem.
Sure. And what's
And then
the
finally, the
FTC?
Flex trade credits. So this is specifically for the traders on the platform. So you will earn these Flex trade credits based on the amount of volume that you put through the platform. And then depending on your FTC trade credits, you'll get airdrops of this ES token that you can either choose to continue to stake to earn revenue share, or you can invest out and sell.
Awesome. So it's just
love
a
it.
bonus for trading.
Yeah.
I like it. So I know this is, kind of like your baby, and these are all your children. But if you had to pick your favorite, which one would it be?
For me, it's FLP.
FLP. Okay.
It's just I am involved personally with my own kind of portfolio. I'm involved in quite a lot of these market making liquidity pools, and they've been some of my best investments because you're holding some of those an index variety of those blue chip assets, but you're also
Mhm.
earning pretty good yield on top of it as well.
And that FLP is liquid. So if they wanted to convert their tokens back, they can do it, right?
Yeah, absolutely. You can enter and exit at any time. The one what was I going to say? The one exception to that is if you get involved in the FLP surge, which is this 3-day event. It's the initial raise, and if you get involved in the surge, you're locked for a month. But in return, you're going to get a whole load more of this ESFDX as a bonus for being an early liquidity provider. So you'll get airdropped ESFDX every month for a year, so long as you stay in the pool. If
Yeah.
you leave, your share of that airdrop goes to the remaining participants.
Kind of like a last man standing.
Yeah.
So the longer you stay, you theoretically could get more if other
Yeah.
people are pulling out.
Yeah, absolutely. And
Hmm.
you know, these I've been involved in a few of these with other perp dexes that I've launched in the past, and uh, it has been really quite lucrative getting in that first raise because of those bonus airdrops that you get. And I expect the same thing to be with Flex Perpetuals.
And so I wanted to clarify more what the FLP does. I understand what it does, but I'm not sure that AG does. So it's your what right. So when I go long on, like, say, Ethereum, if I put a 10x long, the platform has to have a short, correct?
Yeah.
And so that's what the FLP is. The FLP, if I'm betting one way, the FLP bets the other way. And the theory is 85% of traders lose. So therefore the FLP is going to be the better side of that.
Yeah, absolutely. I mean, if I can show you. Obviously, we don't have any data yet because we haven't launched. But if I pop into the June dashboard for HMX, which is the platform that we're obviously we've partnered with to bring this, their June dashboard gives you some statistics on traders' performance. Um, and so this is their HLP, which is essentially their version of the FLP that we're going to be using. And you can see the token price over time. So when the markets are bullish, it goes up because it's a combination of USDC, BTC, and ETH. But
Mhm.
what we can see if we scroll further down is this is the performance of the cumulative performance of traders on HMX.
So
So
I don't
we're
want to interrupt you,
minus
Stu, but
4 million.
can you put your dot on that last peak? Can you put your
Here,
cursor? Yeah. Yeah, right
yeah.
there. That's where EG was bragging to us and how much he had made. And then go ahead and go down to the valley. Go down to the
Yeah,
valley, and that's where we are now.
Yeah,
yeah,
absolutely.
yeah.
So
I was living
the
on,
net
cloud nine there for a
net
minute.
cumulative loss of minus $4.2 million. So if you think
Okay.
about the price of the FLP is essentially a combination of the asset prices of BTC and ETH and USDC, plus or minus the trader's profit and loss.
Okay. How long has HMX been out? So how
So
long
this
is,
goes back to June 23.
okay, so we're just talking like 7 months. So
No,
No,
June
more than that.
23. I'm sorry. I thought you meant
23.
June 23.
yeah,
Okay. So
So
about 18 months,
18
give or take.
months. Yeah.
yeah.
So in 18 months, the HMX LP is up $4 million in trade volume.
Yeah.
Positive.
Positive, yeah.
Yeah. So that's pretty amazing in 18 months.
That's, yeah.
Yeah,
Okay.
and I mean
So,
some of the
so,
stats for this is kind of what we're using as a bit of a benchmark in terms of what we're hoping to achieve, within our first year of operation. So, they've managed to do 55 billion in trading volume since June of 2023. So that's kind of a ballpark between 40 and 50 billion. If we can achieve that in our first year, or better, we'll be doing really well. And those who've invested in the platform, whether it's through providing liquidity for the native token or in the FLP, are going to be doing really, really well. So they've 16.2 million in fees during that period of time as well.
now HMX, what chain is that on?
It's on Arbitrum.
Arbitrum.
Arbitron. That's right. That's right.
Yeah.
I see that
And
their
it,
logo reminds me of like B&B, like that, the orange.
Yeah.
So that's where I was getting confused because I'm like, wait a minute, I thought it was an Ethereum based type of project.
Yeah,
I
it's
mean,
a little bit like the BNB icon, isn't it?
Yeah.
until we started talking with Flex, I didn't even know what I hadn't even heard of Arbitrum. So Arbitrums, since I've used it though, their fees are super low. Like it seems like it's even lower than base, but I assume that's because base has more volume.
Yeah, I think base is just busier and is really, if you're looking at EVM chains at the moment, there's no real competition. Base is the place to be,
Yeah.
and that was, we saw that we saw that was going to be the case, which is why we decided to build on base. But things are really, really taking off there. Ever since Virtuals .io released, the volume and base chain has just been, absolutely crazy.
Yeah.
And I
We
think
launched
that's,
our project on base too.
yeah, it's a great chain, and I think it's going to do really, really well.
Yeah. So FDX is basically like your stock,
Yeah,
if you want to put it that way. And then you can stake it and then earn passive income through the profits that you guys make. 30% of the profits go to the staking rewards. And so that's flux or variable. So
yeah,
if you make $1 million 1 month, then 30% goes to us. If you make $10 million, then okay, that's pretty awesome. And then FLP would be us providing liquidity for the platform and
yeah,
getting a portion of that. Okay. And so
yeah.
you like the liquidity aspect is your number one pick.
I think that's my probably that's where I would be heaviest because it's blue chip assets.
Mhm.
If I just think about my own portfolio, yeah, there's a bit of degen in me, but the vast majority of my funds are in the blue chips,
Sure.
or derivatives of those blue chips. And then I would have, maybe a smaller allocation in the what is likely to be a more volatile token, the FDX ETH.
Gotcha. So fix me if I or correct me if I'm wrong, but the FDX token, you stake it. There's no downside to it at all, other than the rates are variable. But the FLP, if some trader comes in and just is killing it, win after win after win, I could actually lose my FLP.
Yeah, well, the value of the FLP could certainly be compromised if you have a trader that goes on a huge winning streak. But we've got seven specific risk management mechanisms in place to try and limit the any damage that a particular trader getting lucky could do. um,
Okay,
and
seven, huh?
the vast, seven mechanisms. We've got that here in the pitch deck as well. Find that here. So max utilization limit, which essentially is like on a lending and borrowing platform.
Hmm.
You can only utilize a certain amount of that liquidity at any time as a safety mechanism. You don't want that to be 100% utilized, because then if you do get someone that has this massive win, then it's at risk. Auto deleveraging, which essentially is will start to close. If there's any question about the integrity of the liquidity pool, then trades will be closed automatically. I've experienced this on perpetuals platforms myself, and they start with the most profitable trades first, because they're the ones that are causing the biggest damage to the LP.
Okay.
And yeah, I mean, I don't want to go through all of these individual uh, mechanisms, but put it this way: this is what HMX use,
Yeah.
and this has been rock solid since since they launched.
Yeah, I experienced that. I've been trading on HMX now for, I don't know, probably 6 weeks. And when the market is super hot and it's super easy to just long everything, there's only a certain amount of people that can get in. So
Yeah,
that's that risk management, right? They're not going to let everybody. They're like, oh, obviously you just go long on 20x and you're going to make that money. And then the same thing, if you have a trade that has been running for a long time and it's gotten that max benefit or whatever you want to call it, then whenever there is times of need, they start getting chopped. So I've experienced both of those.
yeah. I mean, these platforms, they're designed for kind of the short to medium term traders. Uh, you probably don't want to kind of hold a position for the full bull run on a perpetuals exchange, because funding fees are going to really eat into your profits. And again, funding fees are again just another way to make sure that the whole ecosystem is healthy. Because
Hmm.
if there's too much of the market is bullish, then that's a risk. If everyone's long and everyone's right, then there's a risk there to the liquidity, and so funding fees are used to try and bring that back into balance. So if you're long and everyone else is long, then you pay to be in that trade. You pay the funding fee, whereas anyone that's short actually benefits from the funding fee. So the platform itself doesn't make anything from these funding fees. It's essentially a transfer from long traders to short traders. So if you're short and the open interest is biased to the long side, then those who are short get paid to be short, because it's to try and incentivize more people to be short, to bring that open interest back into balance. And so for these protocols, the goal is long term is to build that liquidity to a level that supports bigger and bigger and bigger trade volumes.
Awesome. I like it. So Are you going to have trading bots included in your platform or no?
Yeah, absolutely. So not from day one,
Mhm.
but we're actually, it's one of the things that we're going to be pushing hard on as soon as we've got the launch out of the way. Is, one of the first things on the roadmap is copy trading vaults for a start. So you'll be able to copy successful traders. You'll be able to see, the best traders on the platform, and you can copy them. So that's one. And then we want to set ourselves apart from the competition by being the kind of the go-to perp decks for grid trading, algorithmic trading. So our Python SDKs are, available for anyone that has their own algorithms that they want. They can use our SDKs and trade with their algos on Flex Perpetuals, and
Oh,
we're going to
okay.
develop in-house grid bots and various other different automated trading strategies that people will be able to use. And there's really not, I haven't seen much of that in the DeFi perp space. There are platforms that are known for it on centralized exchanges, but you've got the KYC issues, uh,
Yeah.
and you have to use a VPN and pretend that you're John from Venezuela to to be able to use these
Okay.
platforms. So we want to do it DeFi style, and one of our devs was actually the first person to develop grid bots on normal decentralized exchanges like PancakeSwap and Uniswap. So they've already done that, and what we need to do now is bring that across to Flex Perpetuals with the leverage element.
Okay.
And
That,
Stu, and
that
and Stu, one thing I think AG doesn't know is you're not just crypto, right? You guys are going to be doing stocks and forex trading as well, right?
Yeah,
oh,
yeah.
I
So
had no idea.
it's foreign exchange, so we'll be doing the majors, euro dollar, pound dollar, Aussie dollar, etc. Then there's going to be commodities, which to begin with will likely be gold and oil, and then we will add um, various other real world assets, if you like, that can be traded on the platform. We are using, and we haven't officially announced this yet via kind of our official channels, but we have decided to partner with and integrate Chainlink as our Oracle provider and to provide data streams. So they have an exceptional reputation in the space in terms of security and integrity with their data. So we're going to be using them, and we're going to be using Pith as a backup feed for our pricing and data. And so between Chainlink and Pith, we can access pricing data for pretty much any asset that's out there. And so it's just a case of assessing the risk of each of these assets before allowing trading on the platform.
So you'll have stocks on there too, or at least certain like
Potentially,
popular
yeah.
stuff.
Yeah, potentially in the
Okay.
future.
Let me zoom this in real quick because I wanna the best answer. You're telling me that you're going to be doing stocks, crypto, and forex commodities and stuff like that. And do I have to KYC?
No.
Oh my God. Oh,
It's all
that
it's all
that
DeFi.
is
All
awesome.
DeFi.
Dude, that just blew my mind. So this month you guys are coming out. How many different trading pairs are you going to have?
So I don't know that answer definitively at the moment. That's one of the things that we're kind of debating at the moment. You will have the major crypto pairs. You will have the major foreign exchange pairs, probably the seven majors to begin with. And you'll have, as I say, from RWA side of things, it's going to be gold and the commodities rather than any stocks to begin with.
Sure.
And then once the liquidity grows, we can then start to look at a longer tail riskier assets on the crypto side of things. So, starting to look at listing tokens that might have, serious hype around them, like we've seen with virtuals recently. So trying to kind of list these quickly, and
Hmm.
then looking at what what RWA stocks we might be able to list in the future. But the ability to do it is there. It's just liquidity.
Okay. So basically, let's tell the world about you guys. Get some
Yeah.
liquidity. Buy some of
So,
your liquidity token pairs.
hey, Stu, how much for FLP are you guys targeting in the rush?
So, we would like to start with 1 million in FLP. I think that would give us a really strong start. Any more than that's going to be better. If we don't quite get that, then we're still going to be able to launch and people are still going to be able to trade, but we might need to be a little bit more strict with some of the trade sizing that goes in.
Have you thought
So,
about reaching out to like different banks or something like that to partner with to help with funding?
So the route that we've gone down with the kind of the virtual automated market making doesn't utilize traditional market makers. Um, there are other models that PerpDex uses that integrate directly with market makers, and that's something that we've got our eye on, and that we will consider if we feel that the liquidity is a limitation. Then we will potentially look into that as a future option for Flex Perpetuals. But yeah, I mean, we are always on the lookout for big investors that want to provide liquidity for that market making LP, but they'll have the same terms as you
You
and
and
I,
I.
and
Gotcha.
that's something that we're really keen to, as much as possible, to stick to that. We've built Flex Perpetuals based on the community. So we've raised 2.3 million already, and every single penny of that has come from our community. It's not VCs who just are mercenary in the space, and as soon as they see green, they start to dump the tokens, and because we want this token and Flex to be around for years to come. We don't want to see that ugly looking chart that we often see once the VC's tokens are vested, they just dump.
Sure. So if I wanted to buy the FLP, I have to pair it with something,
FLP,
uh,
no. So um,
or
this
maybe
is
I'm
our
thinking of the
this is
wrong one.
yeah, FLP is the market making liquidity. We're going
Okay.
to be doing an FLP surge event, and I can share the relevant links to the documentation for that. And you can pop that in the comment in the description of the video.
Sure.
That you'll essentially come onto our is my screen, yeah, it is.
Yeah.
Come onto our site. You'll go to FLP surge, and then you can just deposit USDC here, and you'll receive the FLP tokens in return, and they will automatically be staked for you, and that's it. So you don't need to pay anything. There's no impermanent loss in this pool. It's just it's an index token of that USDC, wrapped Bitcoin, and wrapped ETH, plus or minus traders P&L. On the FDX ETH side of things, then yeah, you would need to. So for some of your community, I know we're involved in our seed round and in our TGE, and so when when the platform goes live and the liquidity is launched on Aerodrome, you'll need to claim your seed tokens and your TGE tokens. The TGE tokens are liquid from day one. So you'll need
Mhm.
to pair that. If you want to stake it, you'll need to pair that with ETH and stake it on the platform.
So when does this surge launch, or is it already?
Surge, sorry, this is our test net that I'm showing you on the screen
Okay,
here.
okay. I was gonna
Yeah.
say, I'm like, so it's completed.
The surge will be the kind of the 3 days prior to the platform going live. So sometime here in January.
Okay.
And
And do we know how much the tokens are gonna be? The
FLP,
FLP.
FLP is just it's so the once we've got, am I still there?
Yep.
Yeah. It's going to be, it's like an index. So you're gonna, it'll start at 1. And if Bitcoin, increases in value and ETH increases in value, it goes to 1.1,
Sure.
etc. So there won't be a chart like on Deck Screener for FLP, for example, but we'll provide the June dashboards that people will be able to track the value on that. And then FDX. So those that got right in the seed round got in at the very best price for FDX. TGE was the next best price, and then anyone that wants that token now will need to buy it off the market.
So which one? So how much money should I bring? That's the question.
all of it.
How much you got?
He said they were looking for $1 million. Just go
I
ahead and
think
drop your $1 million in.
I think the surge, when you take into consideration the 1 month lock and the bonus tokens that you're going to get as a result, it could be a really lucrative play.
And hey, Stu, I wanted to walk through how the surge kind of works, at least by how I understand it. So once you announce the date of the protocol launch, 3 days before that's when surge will start. Now, surge pricing, the sooner you get in, the higher the multiple will be, correct? So you'll have levels like, let's say the first 250,000 is level 1, the second, is that how it works?
Yeah. So essentially it's about how much of that ESFDX you're going to qualify for. So the full details are in our docs. So the first 1 million gets a multiplier of 2, then 1.5 multiplier 1. So the sooner that you get in, the better. We may, depending on what we feel is going to be realistic, nearer the time, we may adjust these ever so slightly, because we do really we want to incentivize people to get involved as quickly as possible.
So maybe you should do day 1, day 2, day 3, right? Like, so if, let's say, for example, your launch date is the 20th, so 3 days before would be 17th. So if they put in on the 17th, they get the highest thing. If they put in on the 18th, because people are gonna procrastinate and they're not gonna put money until the 19th.
Of course,
It's like, oh my gosh, that's
a decent idea. Yeah, I like that.
So
I like that.
Yeah, because I'll tell you what, I could go back in our chart and tell you the exact date that you guys closed the TGE event, because
it's just madness, isn't it? The last 6 hours, it just went crazy.
We had a lot of people take profit on our token to
I like that idea.
Yeah, because I mean, if you're saying $1 million, then but yeah, I think if you do day 1, day 2, day 3, that'll at least allow you to plan as how much, because I'll be in day 1, our treasurer will be in day 1, but
yeah, we've got a lot in the nest egg.
Yeah, you guys are big supporters. Love it.
Well, cool. AG, got any more questions or comments, concerns?
No. So basically, I need to figure out which one I should go into, the main token or the.
Well, first of all, you should have bought in at TGE or seed round. That's what you should have done.
I should have. I didn't because you know why? Because the nest egg has a whole bunch of it. So I was like, I'm not missing anything because I'm still got, a part of that, still
That's
benefiting from that.
true story.
I mean, as I've mentioned, my personal preference is the FLP, but I got involved in the seed round and the TGE as well myself, and I think it's good to have a little bit of each. I think the APRs, the yield will be higher in the FDX ETH staking. Even although it's getting less of the platform revenue, I think the liquidity there is going to be smaller than is what's going to be in the FLP.
Well,
So you're
the price appreciation on FTX too is going to be a big win versus holding the FLP, because the FLP is being indexed. While it is going to go up over the next 12 months, we can guarantee, or not guarantee that, but we can all believe that because Bitcoin and ETH is going to rise in the next, But in that first year of your platform, your FTX token is going to 10x at least. So holding FTX from just a pure monetary standpoint might be better than hopping in to FLP first. So maybe you ride FTX and then you DCA out of FTX into FLP. I'm not financial advice, but that's.
So you're suggesting by the one that I stake first on the platform and get revenue from.
I think you should do both, to be perfectly honest with you. I think.
Yeah, but if I had to pick one to start off with.
Well, I mean, are you asking me personally? Like, I'm personally going to go big. I'm going to go big into FLP because I'm going to use FLP as my cash position. Like, I don't have a lot of Bitcoin. I don't have a lot of Ethereum, but I want to build that up. So instead of just buying straight Bitcoin and straight ETH, I'm going to use FLP as my personal, call it cash backing, because then I get the appreciation of Bitcoin. I get the appreciation of ETH, but knowing Stu, knowing Mike Dre, and these guys, I don't know Bill personally, but I've talked to Bill quite a bit, the CEO, so betting on these guys is going to just help my cash position. So now I can hold Bitcoin, I can hold ETH, but then I'm also going to get the slight appreciation from from Flex itself.
Yeah. I think it depends on what your own kind of personality is and what you like to get involved in. The FDX position has got way more upside potential, absolutely. So that's whereas the FLP is kind of more like your kind of blue chip investment, steady, safer. Whereas the FDX, there's multiple X's on the table with the FDX token, plus probably higher yield if you stake it as LP.
Hey, I do have one question, Stu. With FDX, with the LP, so you pair your FDX with ETH, and then you could do one of two things. You can stake that on the platform, or you can stake it in Aerodrome.
Yeah.
How are the rewards? So, like, if I stake on Aerodrome, I receive Arrow as my rewards. Yeah. Okay. Yeah. And then if I stake on your platform, I receive what as my rewards?
USDC, or USDC and the ESFDX, the bonus incentives.
Okay.
So me personally, I would stake it on your platform and earn USDC that I can use for, whatever.
Yeah, you can claim that anytime. You can compound by buying more, or you can go out and do what you want with that USDC.
And that's the 45% or APR? 30. What was the 45?
For the FLP.
FLP.
Yeah, and that's also USDC.
Too many, abbreviations going on now. Now I'm getting confused.
Yeah, I've got some nice diagrams. I'll try and share with you as well.
Yeah,
it's a good thing you're pretty, AG. You're not the brightest.
Wow.
Hey, listen, it's about, listen, you're the pretty one, I'm the smart one. We all have our roles in this.
All right. I'll let that go.
I'm not sure if you'll be able to see this very clearly.
I FDX. Okay.
So this, yeah, it's not. I maybe have this in another 2 seconds.
But so AG, you didn't get in a TGE or seed round other than what the Treasury was part of?
No.
Yeah. So I don't know. I personally think that right now the best thing might be to go into FLP Rush because you're going to get those bonuses. So since you're not in either one of them, going into the FLP Rush at least gives you those bonus tokens. But again, remember, once you go into the Rush, you have 30 days where you're locked, but then you also your bonus tokens come over 12 months. So you're kind of locking that money up if you want that full bonus over 12 months.
Okay. Yeah. No. What I'm
But
looking for, the best passive income play. That is what I'm looking for, basically.
yeah, I
Passive
think
income, probably FLP, passive income.
Okay.
The you're getting that bonus ESFDX as well, so you are getting some exposure to the price of the FDX token as well, through that, that you're going to earn. Every month you'll get that ESFDX airdrop, so you'll that'll be valued at whatever FDX is valued at. So you've got that.
Hey, Stu, one more question. So the ESFDX that you get as your bonus, that's auto staked for you, correct?
Yeah. So as soon as you hit claim. Oh, no, sorry. That's I'm thinking about the ESFDX that you earn as being already staked. But for the FLP surge, I'll need to double check whether that's automatically staked. I think it is, but let me come back to you on that.
Okay, so well, let's go back to the ESFDX that you receive for your rewards. Does that, when that auto stakes, that just adds to your FDX position, and I get USD for that?
Yeah.
Yeah. So the ESFDX is the reward token for staking your LP tokens.
Yeah. So what you'll see is when you're on here. So this is just testnet, guys.
Mhm.
But I've got $354 worth of rewards on testnet. So if I claim and compound, this is showing me here that I'm getting 345 of that is USDC. Only $9 is ESFDX, and then the flex points is 22.57. Remember, the flex points is kind of like that multiplier that you would lose if you withdraw from the pool. So if I
Okay.
compound that,
I like that animation.
yeah,
Yeah.
our little
That's cool.
flexi dragon.
Yeah. Well, those little flex symbols. Yeah.
Yeah.
I like that.
So this now
It's a simple thing,
shows the different elements that I've got. So I've got, $1,200 in the FLP. I've got 10 FDX ETH LP staked, which is worth $3,000. And then I've got ESFD. So it breaks it down as to what is what, essentially, so that you can, if you wanted to then vest out, and if you wanted to remove your ESFDX, you could then remove that and vest it out.
Nice. And then confirming the FP points, those are the bonus points. If I withdraw anything out of my account, I lose those?
Yeah.
Okay.
So FLP is the main token,
The
and
FDX.
FLP is the market making liquidity. FDX ETH is, well, FDX is like the native token.
the native token. Okay, I got those two
Yeah.
backwards. That's what it's.
Yeah.
That's where I'm getting confused. And you're saying the FLP is the way to go for me starting off for passive
I,
income?
I think at this point it is, in my opinion, because you're going to get those bonus points if you go into the rush.
Yeah.
So if you're not going to join the rush, then maybe you would want to split because then you get the price appreciation of FDX. You know what I'm saying? So right
Yeah.
now, you have the luxury of knowing that you're going to get a bonus if you join the FLP rush, right? So, now if you were just to come in, let's say a week after the launch, now you have to decide, which side you might want to go on. And at that
You
point,
know
maybe
what?
it's better to split your money.
I was thinking if I put in the FLP, invest in that, and then I trade on the platform and lose all my money, I get some of it back.
Yeah,
So I can go
you get a
back
little bit
and lose
back.
my money
Yeah,
again. Yeah.
I
And
like it.
you get the trading points. That's kind of like when you lose at the casino, but they give you free drinks.
Yeah, I was thinking about that. TGC. I was thinking those extra bonus points for staking. Nice. Okay. Yeah, I think that's what I'll do. Now, when is the rush? I have to
So it'll be
wait.
3 days.
3 days prior to the launch,
So we don't know
and
that yet.
we don't know that yet, but I should be able to give a firm date by the end of next week.
Okay.
Okay, so yeah, Stu, if you find out before Monday, or if you find out on Monday when you have your meeting, maybe if you could text us and we can talk about it on the show Monday before we launch on Tuesday.
I think it's
This
unlikely to be Monday. It's more likely to be towards the end of the week once the infrastructure's all set up.
Gotcha.
But
Okay.
I'll let you guys know for sure.
Well,
Yeah,
cool.
that's
Hey,
awesome.
do you have any more questions or?
I don't, man. That was a lot of info. I guess the only question I have, you've already answered it multiple times of, you don't know when it's coming out yet, but it is this month, January.
Yeah.
So it's just a waiting game. Just got to follow you on Telegram. Wait for you to
Yeah,
drop some links of some alpha.
yeah, stay on top of the Telegram, the pinned messages in Telegram. We also post on X, regularly. The Discord I have to be totally honest, haven't really started utilizing Discord yet because I personally don't like it. But
Hmm.
we are set up there and we're ready to go because it's probably a more useful channel for a trading platform to be on because we'll be able to have really segregated content in there.
Yeah. So, do you have any more anything that you want to add? What's your 30-minute or your 30-second or 60-second elevator pitch on why
I mean,
to
I
join in?
just finish it by saying, we're launching with battle tested technology, so that the technology works, the engine that drives the trading platform works, and that's been battle tested. But our innovative tokenomics with introducing the aerodrome flywheel, I haven't really emphasized that a huge amount on this call, but it's going to be a massive plus point for us, that no other perp dex is doing, is utilizing that aerodrome flywheel. And there's an extra revenue source there for us. There's also, it means that the APRs are likely to be higher for those that are staking the native asset. And then for liquidity providers, we're in total, we're giving back about 90% of, in fact, not about, we're giving back 90% of the revenue that the platform makes to the various different places that you can stake in the ecosystem, and to 15% of that revenue is going towards depth of liquidity and buying up protocol loan liquidity. So there's going to be a constant bid on the FDX token from the platform itself, and the security aspect. So we've got the benefit of seeing what happened how HMX has run and operated for the last year and a half, and we've just finished our audit through Code Arena, where we did a competitive audit, so that we had up to, I'm not sure the exact number, 100 white hat hackers were trying to break it, and there was 2 issues were found, very, very minor issues, and in fact, because of the way that the protocol is set up, they're not actually technically an issue, but they've been raised and they've been acknowledged by the dev team. And so hopefully we'll get that report out to you guys soon as well. So we're taking that seriously, the security seriously, which I think is important for any project that wants to stick around for the long run.
Yeah, 100%. So are you guys worried about, government coming down on you about being a security?
Probably was until the 5th of November.
Okay.
And then things changed. I think that I, I I think that we're going to see a better landscape for DeFi and regulations in the coming year.
Awesome. I like it, man. All right. Well, if you guys have any questions, leave a comment. We'll send the question out to Stu and get back to you as soon as we can. Um, Goldwyn, you have anything else?
Nah, man, I'm in seed round. I'm in TGE, and I'll be in FLP Rush for sure.
Awesome. All right. Well, I'll be there.
Awesome. Thanks for having us, guys.
No problem. Have a good one. See you guys later. Peace.
See you soon.